Ladies and gentlemen, today I'm bringing you the only trading strategy that you need for the rest of your life. And no, I'm not joking, because these two concepts that I'm going to show you in this video are the fathers of all the popular trading strategies like ICT, smart money, CRT, and all these cool trading strategies that we've seen already. This basically is the father of all these. So once you learn these two concepts, you don't need to learn anything else in terms of technical analysis. The trading strategy has been extracted from this video here from Moham Trading, where it basically says trading was difficult until I learned these two concepts, and this is completely true. He explains it really well, but today I'm going to explain you today in the charts of Forex Tester Online, obviously. And don't forget to get that massive discount coupon that you got down below. But let's go ahead with this trading strategy. So basically, first we're going to do is we're going to come to gold, because I love trading gold. It's a great asset to trade. And as well, we are going to be using two time frames. Okay, we can choose the time frames that we actually want, and the ones that especially combine better I like time frames like 4 hours for analysis, 15 minutes for entries, 1 hour analysis, 5 minutes for the entries, or 15 minutes for the analysis and 1 minute for the entry. And guess what? We are going to be scalping today, so we're going to be using the 15 minute and the 1 minute time frame. How it works, it's really simple, and the only thing that we need to do now is basically, well, come to our 15-minute chart time frame and then come to our 1 minute time frame. Basically, we only need to go here to layout and just go from this one that is a predefined one to this one here. Basically, if we're going to use two charts, if we want to use 3, we can go to this one, or we can use 10 if you're a complete lunatic, but in this case, we're only going to use 2. So let's go ahead with these two charts. So first of all, what we need to understand, and that everybody should know already, is how market structure works. Market structure works in this way. It goes up and down and up and down and up and down. So basically what it creates is lower low, higher high, lower low, higher high, lower low, higher high. I could make a song out of this. Basically, once this happens, okay, we can define that the market is in a trend. In this case, we can see an uptrend. When does this trend come to the end? Basically, when the price drops down and takes away one of my lower lows. In this case, it would be a lower high, okay, because it's been the low that's created the high. Now, once this happens, what it creates is a higher low and a lower low. So now we have a downtrend. So when the price comes back up here, it will come down and up and down. Obviously, it doesn't happen exactly like this all the time. Everybody would be a millionaire. Because it as well, sometimes it can come up, down, back up, back down, and create different market structure breakouts. The thing is that normally this doesn't happen a lot. Basically, we can have maybe a double market structure break, but by the rest, it doesn't tend to happen a lot. So this is a great confirmation for our entries. But the thing is, how do we actually find where to enter? Well, ladies and gentlemen, that's what I'm going to explain in a minute. Because this is one of the most difficult things to do, is actually, what zone should I trade? Well, with this second concept that I'm going to show you now, basically you'll find the perfect zone every single time. So what we're going to do is we are going to come to the 15-minute time frame, because obviously this is where we are going to find our zones, and we're going to go to the London Open, because obviously we're not going to be trading New York in the Asian session, because most of the times of it, it's not going to be very volatile. So obviously we're going to go to London. London isn't very volatile as well, but at least it's got a bit more volume that we can find in Asia. So once we're sitting on our London Open, now we need to find our zone. And the best way to do this, we can use fair value gaps, order blocks, we can use anything really. But what I really love to use, and I think everybody should experience, is using engulfing candles. And yes, engulfing candles in any zone, and that's the best part of it. So basically what we're going to do is we're going to come to indicators. If anybody has some problems finding these engulfing candles, and it's got here engulfing bar. If we activate this, it will show us on the chart when we find an engulfing candle. Okay, so let's go forward a bit in the chart to see if we find this engulfing candle. There we go. There we've got our first engulfing candle. You can see that basically the red candle covers completely the green candle. And here comes a little discretional note that sometimes we can see engulfing candles that covers your entire candle and flows about, and other ones just cover it just a little bit. I personally only take the ones that are really big engulfing candles. If they're too small, then obviously we shouldn't consider them as too much, because at the end of the day, the difference of volume between buyers and sellers hasn't been so big. And what we are actually looking for is that we have a big difference between buyers and sellers, or sellers and buyers. So Here we've got a nice difference where we can basically see that a price even rejected here and then it dropped right down. So what we're going to do now is we're going to mark out this engulfing candle in this next way. We're going to pick basically the high, okay, of the wick of the previous candle that it's engulfed, and we're going to drag it down to the candle. And here we are going to draw this like that. So basically here is the difference between the buyers and the sellers, and this is the point where we can start looking for entries. It's a really similar way as marking out an order block, because at the end of the day, an order block is the last candle before the break of the trend. In this case, green candle before the red candle. That's as simple as that. But in this case, we're using, first of all, they're going to have to be engulfing. So once we've got an engulfing candle, we are going to come to the 1 minute time frame to see if we can see some price action happening. So basically, let's see, well, let's go into the 15 minute. It's going to be quicker to actually see. And if we get another engulfing candle, we can use it as well. In this case, you can see this is a not so good engulfing candle. I'm still going to mark it out so you can actually see some examples, but just we're going to keep this one here because obviously it's still a valid zone. And now we have got this engulfing candle here. So now we have 2 engulfing candles that we can look for the price to actually touch and bounce off again. But first of all, what we need to check is that we can't enter without any type of confirmations, because obviously entering without a confirmation is like trying to catch a knife while it's falling down. So what we're going to do is we're going to wait for a confirmation, and as you can see, the price has entered the zone. Perfect. Now we need to watch the market structure. And if you watched before what I said, basically I said that the price is going to push up, down, up, down, up, down. So now basically what we are looking for the price to break this little zone here. If the price breaks this zone here, I'm going to be entering the trade. And what I like to do in these cases, because especially when the market structure breaks, it tends to break quite hard. So I like to add basically sell positions here. Okay, basically a sell stop. So what I'm going to do now is I am going to go forward to see if it actually breaks through. As you can see now, it's just pushed up again. So now it's updated the zone where I'm actually going to look to enter. And if it goes too high up, then obviously I am going to forget this zone because it doesn't make any sense. So I'm going to take this zone away and see if we get another engulfing candle. Okay, we've got another one just here. And as you can see, this engulfing candle isn't the best engulfing candle, but I'm still going to mark it out just so you can actually see. So in this case, I'm going to bring it from here to here, and there we go. So now let's look as well again at the 1 minute chart. And as we can see, we have the market structure come up here. It's broken the market structure, and this is actually a confirmation because it's a valid market structure, and we could see a bounce off here. But obviously I'm always going to wait for the confirmation of the market structure to break down. So let's see how it approaches this level. It looks like it's going to come down. Okay, it's broken above, okay, and it's come down again. So in this case, sometimes it can be a bit difficult to actually see it when we're actually live, because obviously we need to first wait to see this formation to actually identify its market structure, to actually then place our sell stop here. But our sell stop would be right here. So here we'll be entering our first trade, placing the order just there, and our stop loss is going to be placed in this case above the candles. It wouldn't make too sense of placing it just up here, because the price could actually come up here, fair value gaps, and then go down. So we're going to place it just above these candles, and the take profit is going to come down here to a risk reward of 1-to-1. Do we need to use a risk reward of 1-to-1? Obviously not. We can use any type of risk reward we actually want, but obviously to do this, we need to backtest to see how it works. But don't worry, because at the end of the video, I'm going to give you a general idea of how it works best. But with any trading strategy that I try, I always like to basically use a risk reward of 1-to-1, and then take from there to if I go to a negative risk reward or positive risk reward. So now I've placed my trade there. What I'm going to do is set this to 1% risk as it's set there, and place the order. So let's see how this trade performs. There we go, it's coming down. Perfect. Hit the take profit. Perfect. Now what I'm going to do is I'm going to not use this zone anymore, because obviously I've already got a trade of it. I don't need another trade out of it. So I'm going to look for the next engulfing candle. As I see, I've got one here. As you can see, this engulfing candle happened here. So I'm just going to bring this on right chill over here, put it down there. Perfect. So now we got this. We have another beautiful zone here that we can actually trade through. Let's see if the price approaches it again. There we go. price approaches the zone, and now we just need to wait for this market structure to break. So basically this level here is the one I'm looking at, and no, actually not, I'm looking actually at this level here because the price pushed up, down and up. Obviously this isn't the main market structure because as you can see this push here hasn't been overtaken, so this would be the actual zone if we go for strict market structure. But if we go a bit more internal in terms of the microstructure that forms inside the price, this could be enough as a valid confirmation. So if price breaks below here, I'll be entering the sell stop. Okay, the price has gone higher, so now basically we'll be looking at this zone. Okay, it's done a little market structure here, bring it up again. So now this zone here, really small zone, would be my actually entry level. Okay, let's see if it goes any higher. Okay, it's made another little high, so now I'll update again. So now basically if the price breaks below this level, I'll be entering a short position. So let's see if it happens. Perfect. This was where my sell stop would have entered. The thing with this strategy, you need to constantly update your sell stops because obviously you can have it firstly here with one lot size because the expected stop loss can be up here, then this one gets smaller, so you need to add another order. So basically the only difficulty with this is basically adding different types of orders in terms of the size of the stop loss, but in this case this is going to be the sell stop here, and the stop loss is going to be above the zone. I think that's a secure place, and the take profit is going to be down here at the risk reward of 1-to-1 as the first trade. So let's place the order there. And let's see how this one performs. Okay, there we go, another nice take profit. Perfect. So now we're just going to take these zones away to not fill it all with different zones, and let's see if we find another nice engulfing candle. And we've actually got one here. It happened straight away, and there it is. So now we've got this engulfing candle. Let's see if the price approaches it again. Perfect. If it breaks this low, I'll be entering the market. Okay, it's made another high. If it breaks this low, I'll be entering the market. And there we go. This is what I'm looking for. Comes up, back down, back up, and breaks the level. So I'll be entering with a sell stop here below. So let's add our sell stop just down here. And in this case, the stop loss can either go above the actual zone, above this level here, above this level here. I'm going to leave it above this level here. I think it's a good enough level. Price has just bounced off this market structure level, so let's leave it like that. And our take profit is just going to come down here to the risk reward of 1-to-1, and there we go. So let's continue forward with this one. Let's see how it performs. We know obviously it actually touches the zone, but I don't know if it actually hits the take profit. Okay, perfect. We've hit a stop loss on this trade here, no problem at all. And now we just basically take the sun away and look for the next engulfing candle. That is this one here. So let's mark out our engulfing candle. Perfect. And let's see how this one performs. Okay, the price has actually approached the zone. So let's see if we get any type of market structure. Right now we're looking at this one down here. Okay. This seems like a really small market structure level, but we could actually take advantage of it. So basically we'll be looking to break this zone here. Okay. So let's see if it actually happens. Okay, it's a broken through. So this would be actually our entry level. So basically we are going to be putting our sell stop basically there. Obviously this trade is a bit more tricky. The market structure isn't so clear, but it's still a valid trade at the end of the day. So I'll be more or less placing the stop loss above here because at the end of the day, there's no really any good level to actually enter in terms of placing the stop loss because it's just a bit fair value up there. So I'll leave this more or less up here and place my take profit down here, risk reward of 1-to-1. And let's see if it goes down. Okay, it bounced off the level here. It's quite nice. And there we go, nice take profit there. Obviously, like I say, this one is a bit more tricky. The market structure is quite more smaller. And obviously for a beginner, maybe it's a bit more difficult to actually see the opportunities. But at the end of the day, another thing that we must take in consideration is that there's a big fair value gap here. This one got filled, and this is why you can maybe look for the market structure to get smaller and smaller and smaller once it goes into the zone. So in any case, let's look for our next engulfing candle. That is this one here. This red candle is engulfing our green candle. So let's add this zone into here and let's see if we get any type of confirmations. Price has entered. Perfect. Let's see if we get any type of market structure shift. Okay, right at the moment we haven't. We're looking at this level here right at the moment. Okay, it's gone up higher, and if we break this level here, we could have an entry. Perfect, there's the entry. So let's place our sell stop right at this point here with the stop loss just above this level, and the take profit would be more or less down here at a risk reward of 1-to-1. So let's place that into there, and let's see how this trade performs. Okay, it's coming down. Perfect, another take profit. That's what we like to do. And let's see how this one closes. Perfect, we have another engulfing candle here, and as you can see, it gives you a lot of trades. I mean, just today we have taken 1, 2, 3, 4, 5 trades just in one day, and with purely price action and zones. So this is something that I really enjoy because it always keeps you engaged trading, looking at the zones, seeing how it performs, and at the end of the day, I think that is it's really pleasant and it's really fun to trade. At least I would give it a try in Forex Tester Online, test it out yourself. Don't forget the description, you got the nice discount coupon, because it's a trading strategy that is worth trying out. So what we're looking at right at the moment is this level here, because it's already approached the level. So let's see if it actually breaks the level. Okay, it's made a new high. So we've been looking at this level here. Another high up here comes above, and here we could take in consideration this level here. But how the candle isn't really very big, it's more like a doji. I think I'm not going to take that one in consideration. I'll probably stick with this one as a better confirmation. Here we do have more of a market structure level, so here we could look at this one here. Let's see if it breaks through. Oh, we'll be looking at this level here. They actually did break through with this candle there. So let's place our order there, see how this one performs. The only thing that I don't like is that the stop loss is going to be a bit small. So this is something that we've got to take care of. Just place it up there. Take profit down here. Risk reward of 1-to-1, and let's see how this one performs. But honestly, I don't have too much hopes based on the size of the stop loss, but hey, let's see. Exactly what I thought was going to happen. At the end of the day, the experience kicks out. But what we are going to do now is jump to the next London session, because we are already deeply near the rollover. So even this last trade, maybe we shouldn't even have to take it, because even the previous trade was quite late. So at the end of the day, you don't need to trade every single day, and preferably you would only trade maybe once or twice a day, because obviously in terms of psychology, taking too many trades isn't a good idea, because you're just going to get completely exhausted. But what we can see now at the moment is another nice level down here. Let's see if the price actually approaches it, or it creates another candle. So it's coming close. Okay, it's entered the level. Now we just need to wait for our confirmation as always. Okay, it's broken through. It's breaking quite strong. So I think we're not going to have a confirmation on this candle here. So that is completely fine. Let's see if we get any other engulfing candle. Oh, this is a nice one. Look at this one. This is beautiful. Okay, look at that. Now we just need to wait for the price to approach it again. Let's go in the 15-minute candles just to speed up just a little bit. Okay, no problem. We have another engulfing candle right here. So this one is engulfing that one, and this will come down to here. So now we have two levels that we can actually trade. Let's see if we get any reactions. And actually, as you can see, price action in 1 minute is already acting in terms of dropping in. So if we find a push out of here, that will be really interesting. As well, we could look at this level here that it's actually broke through, but I didn't see it in live. So obviously I'm not going to take that one in count. So I'm going to wait for another opportunity to actually get a long trade here. So what I'm going to be looking for is basically this market. I would say this level here above. So if it comes down, I'll look for another level. So okay, it's coming below. Looking at this level here right at the moment. Perfect, it's broken through. I could even open just a normal position here, but in this case I'm going to use the same ways. So a buy stop. Add our stop loss just down below here. Okay, okie dokie, and this will be okay. I need to add a buy, not a sell. Correct. So there we go. Take profit will be up there. Risk reward of 1-to-1, 1% risk, and let's go. All right, let's see how this one performs. Okay, no take profit. Great. It's been a great trading day. So now basically we would take away this zone, but we've already taken a trade on this one. We're not interested in taking any more, and it looks like it could approach this zone up here. Let's see if it does it, and it does. And as well, we get an engulfing candle down here. So hey, we've got two zones that we could take a look at. The only thing is that they're really close together, so here we could get a bit of a paralysis of analysis, because at the end of the day we don't know what zone to trade. We have too many to to choose from. So now we're just see, but what we can see is actually that this zone is obviously stronger than this one, and it could break through this level here. So let's see if it does it. Perfect. We'll be entering a sell position right at this position there. So, and we'll place a stop loss just above this level and the take profit just down here at Wolf's Water 1-to-1. There we go. Place the order, and let's see how this one performs. As you can see, it's virtually broken through this level here. So at the end of the day, we don't need to worry about too much about it. But it looks like it could go to this to stop loss. Yeah, exactly, it did. We can see that it got at least to the half of the take profit. So something that we could take in consideration if we want to protect the position or anything like that. But in any case, we've hit a stop loss. We can go to bed and cry a little bit. I don't know if you, but when I started trading, if I would hit a stop loss, I would go to bed automatically. I wouldn't think about anything else during the day, and I would be completely depressive. Don't be that to you, but it definitely had to be when I started trading. It was like, fuck, I've just lost 100 euros, and that happened to me a lot. So I used to go to bed quite a lot during the day. But hey, that's a depressive story for another video. What we need to look now is we have another engulfing candle here, so we have another nice zone that we can approach. Let's see if we actually get a nice approach to it. Okay, it's come to it. I'm looking at this zone here to enter the sell. We enter the sell at this position here, nice and simple. And as you can see, the trading strategy is really simple. Once you understand the two concepts of having where to place a zone and where to and how to confirm it. Ooh, look at this one, beautiful. And how to actually react to the zone. And your trading career is done. You don't need anything else. And honestly, you don't need anything else. It's something that it's so good that you just don't need anything else. Once you've got a zone where to trade and a confirmation to enter the trade, that's it. You don't need anything else. Obviously, you can use different concepts. You can use fair value gaps. You can place your traditional order blocks or anything else, and then you use your confirmation to do this and that, and it's as simple as that. In my case, I really love the engulfing candles, and as well, I love market structures, so that's why I've included these. But you can do it by yourself, and the best part is that you can do it without any type of risk with Forex Tester Online. So at the end of the day, it's a win-win situation. So let's look at this engulfing candle. This looks like a nice win-win situation as well. Obviously, this engulfing candle isn't so big, and I did mention at the start of the video that the engulfing candles that haven't got so big explosive difference aren't the best. I'm trading all the engulfing candles right at the moment to show you the most example possible, but I wouldn't trade these candles if they haven't got a really explosive move, because at the end of the day, what I want to watch is a big difference between the buyers and the sellers. When I see these big differences, then I can say, okay, this zone will probably have another reaction if the price approaches it. Let's see how this one works out. So right at the moment, it's entered the zone, it's broken the zone, so it looks like we're not going to do anything with this one. So I'm just going to take it away and wait for this 50-minute candle to close to mark out this zone down here. And let's see if we get any price action to this one. Let's go on the 15-minute candle to speed it up just a little bit. And we have another engulfing candle just here. Let's place this just here above, and there we go. So now we have two situations to where we can actually get a trade. So let's see who wants to come first. So right at the moment, it's just about to approach this level here. And okay, it's touched it. I'm looking now at this level here, but now we need to think, is the price strong enough to break this level here? And this is something that I don't like trading, because at the end of the day, I'm just lowering my odds to get a take profit, because if I do get a confirmation that breaks down here, then at the end of the day, I don't have a confirmation that this zone isn't going to be weak enough to actually get broken through. So the only thing we can actually attempt now is with this level here, then we can take a trade until this level here. Otherwise, I wouldn't trade. So there we go. I would enter the trade now because basically I have some space. But if it had been down here, then I wouldn't have entered. So let's place our stop loss just above this level. And as you can see, the risk reward is literally a 1-to-1 to this next zone. So that is interesting, because we could even, if the price approaches here, we could actually enter another buy position there. So there we go. Nice take profit that we get there. And as you can see, price is reacting, but we haven't got any market structure to actually get a confirmation more than this high up here. So if it breaks this high here, we could enter a trade. Let's see if we get any more market structure in terms of nope, we don't, and it looks like it's going to break through. There, it breaks through. So hey, you and me know that I'm going to enter another trade here. So let's just back out one candle and place our buy stop just here above, placing a stop loss. In this case, we have just valid market structure level and this one. Honestly, I think I'm going to place it in this one because this one here is quite close and I know how gold works. So I think I'm going to place this one here, and I think I'm going to feel more comfortable with that trade there. So basically it's double the size of our average trade, but that is completely fine. So let's see how this one performs. Oh, it looks like it's going to go up. Okay. Ooh, that's a shame. That is a shame. There's literally a difference of $15 between leaving in profit and probably hitting a stop loss. And this is something that I always do in my personal trading, and is that I always close the trades earlier. And me personally, I don't know if I would have closed this one particularly, but most of the times when I'm approaching the take profit, I'm going to cut it before I actually hit to take profit. And it's something that I think has helped me a lot in my trading career, and it looks like something like a bad habit in terms of cutting the wins too soon. But at the end of the day, I've seen this situation happen so many times that it's just something that comes in naturally. But in any case, let's see how it ends, because we still can hit the take profit. It doesn't mean we actually have to hit the stop loss. And okay, perfect, we've hit the take profit. So it's been 2 nice trading days. We've made a 5% profit, only with a 1% risk. If we would have gone with a 2-3%, we could have even passed the pot firm. So I think that is glorious. As well, if we come into like our analytics, we can see we have a nice equity curve coming up to this 5% profit. And as well, if we come down here, we've done 11 trades in 2 days. So that is a amount of trades. And obviously we have had a win rate of a 73% with risk reward of 1-to-1, so that is perfect. As well, if we come to analytics insight, and this is quite interesting because if we disable the stop loss and place a take profit of 145 pips with a max holding duration of 6,058 minutes, we're looking at a potential net profit of $1,199 versus the $500 that we have actually made. As well, we could scroll something. Okay, if I move the stop loss around here, we can see that this trading strategy doesn't work really good with a stop loss. So we could actually click this off to actually leave the natural stop loss. And here we could basically see that we have some options here. But at the end of the day, I think this trading strategy is so good that a fixed stop loss or take profit maybe isn't the best option. So at the end of the day, we could either disable the stop loss, and if we disable the stop loss, we would have had quite an amount of profit, even just using the natural take profit. But what I like to do in these cases where a fixed stop loss and take profit doesn't match the best, obviously this is just 11 trades. If we do 100 trades, we are going to get more data here and probably some better options in terms of stop loss and take profit. But when I find these sort of cases, I prefer just to play with the max holding duration, see what is the minimum that I need to leave it. In this case, we can see that 24 minutes leaves me virtually the same net profit than 5-6 hours. So I would leave it down here at 24 minutes. And now I know that I'll just place a stop loss and the take profit as I always do, and that my position shouldn't last more than 24 minutes. And that's how I would play this optimization out. As well, we can come to the trading session analysis and we can check out how this works. In this case, we've been working on the European and New York session, and we can see that New York session has slightly higher win rate than the European session. So hey, it's something to take in consideration as well. But in any case, what I would love to know is your opinion back down in the comments. Tell me what you think about the strategy, if you tried it before, if you tried smart money, ICT, and all these trading strategies that are basically have been born from these 2 concepts. And I would love to know everything you know back down in the comments. And obviously don't forget that in the description you've got a massive discount coupon for Forex Tester Online, so you can get it for a cheaper price and start backtesting your trading strategies and start making your trading better. So as always, my name is Jack, and I'll see you next time.